Hey everyone, this is Sean and thanks for watching this week's Saving Your Future episode here. Wanted to talk this week about dollar cost averaging. So have you heard of that? If you haven't, definitely leave a comment below. I'd like to know who's heard of it, who hasn't heard of it. And is that something you've done? Definitely let me know below. I'd love to hear your thoughts and comments on it. And as this video goes on, if you think of something that you want to ask a question or it's, point out a comment, I definitely would welcome that below. I'd love the opportunity to interact with you. So please do that for sure. And definitely subscribe to learn more. So with that, let's get into the topic. Dollar cost averaging is a methodology in purchasing stocks or any other kind of investment where you routinely make an investment in that particular security or investment. So the best way to describe it is this. Let's assume that you have $100 a month and you want to put $100 a month into ABC company stock. So you want to say, okay, well, regardless of whether that stock price goes up or goes down within a relevant range, I'm still going to make my investment. This might work with an IRA. This might work with some other type of investment like a mutual fund as well. But regardless of where this investment goes, I am going to invest every single period. So let's assume it's monthly and I'm putting $100 in every month. And let's assume that $100 I'm purchasing in month one and the value of the investment is $1 per share. So that means that I'm putting my $100 in and I'm getting 100 shares. Let's assume that in the second period, the cost is $2 a share. Well, you're saying, hey, that's great. The first shares that I bought were $1. Now it's worth double. And this isn't a realistic number, but I just want to use this as an example. So now it's at $2 a share. So you're still going to take your $100, but instead of getting 100 shares, this time you're getting 50 shares. So what has happened with just those two particular periods? Well, the first shares that you bought were at $100, were at $1 a share. The second one set you bought was at $2 a share. But what you've done is now you have 150 shares with an average cost of $1.33 a share because you have 100 shares at $1 and you have 50 shares at $2. So the average there is $1.33 per share. So now with the fact that at this point in time you have shares worth $2, then your average cost is $1.33. Let's assume in period 3 that the stock price goes down to $1.50 a share. In that case, you're buying 66 shares. And after period 3, you've spent $300 on your investment. But that investment is worth $325, so you're still ahead of the game. You see, you've purchased your stock at $1, 100 shares. Then when it was $2, you got 50 shares. Then when it was $1.50, you got 66 shares. So you're continuing to buy at whatever the market price is. And even though the stock started at $1 and went to $2 and now it's at $1.50, you've still made a profit. If you're investing for the long haul, that disciplined approach of investing the same amount each and every period allows you to set a non-emotional investment and be able to carry out that investment period after period after period. And in which case, overall, the idea when investing in stocks is that you're expecting this company is going to have a growth trajectory over the long haul. So assuming that's the case, even some minor ups and downs will not affect your strategy. And overall, when the stock goes down, you're buying at a discount. When the stock goes up, your other shares have had capital appreciation, and therefore you can't really go wrong with that investment technique. So I'll also link in the description below some of the tools that I've seen out there, some that might be very helpful to you that you can use. And if you ask me, if you send me an email, and I'll put my email in the description below as well, I'd be happy to send you a quick Excel spreadsheet that you can calculate it on your own also. So let me know, have you tried dollar cost averaging? Is it something that you're going to consider going forward? Have you learned something here? Give it a thumbs up and definitely subscribe. The other thing I'd like is for people to ask questions and tell me what other topics you'd like to hear about, because I want to share, based on what you're looking for, the best topics that are of the most interest to you. So please go ahead and comment below, and I will answer every comment to the best of my ability. So thanks so much for watching, and if you found value in this, please share it with someone else. We'll see you in the next video.